Hi everyone. So today I'm going to be covering a company that I did quite a while ago, about 10 months ago, but did come in as a stock request update. So I'm going to look at Q2 earnings for this year. So let's get right into it. Let's see how Renaissance Technology is doing. So let me go ahead and share my screen and we'll get right into this. So the earnings came out June 30th, or it ended for June 30th, and the next earnings for Q3 is going to come out October 22nd of this year. And you have to be a little bit cautious with this company because revenue dropped about 10.7% in a net loss under international financial reporting standards. Keep in mind, this is a Tokyo or Japanese-based company. It is a semiconductor technology company. So how it trades, you're going to see in a second, is on the OTC market for the American users, which is over the counter. So it's a little bit different. The numbers might be a little bit different, but regardless, we're going to just take a look at the financial highlights. So revenue, like I said, decreased 10.7%. Operating profit was also in decline. There was a net loss. The outlook, it's okay. The automotive unit performed better than anticipated with sales growth a 4% quarter over quarter, especially in China. They did revise their targets in June 2025. Renaissance held a capital markets day and lowered its medium-term operating profit margin from 30 to 27.5%. So there's that, but they are still bullish on Tipranks, which you're going to see in a second. They revised down a little bit. And I did want to also check the analyst forecast on this company. So just a couple of observations here that the analysts noted were slower profitability recovery, long-term growth drivers. They still do believe that there are a good amount of growth drivers that's reflected in tip ranks, which you're going to see in a second. There are some risk factors, including new tariffs with the United States and heightened competition, of course, with China. And you could even probably include South Korea and Taiwan into that. Downgraded guidance. Management lowered its long-term profit margin to 27.5%, like I said, and pushed back its 20 billion annual revenue goal by 5 years. So just to keep in mind a couple of these things. And if you look also on it, it's it says 3 point something trillion for their market cap. If you convert, it's about 21 billion. So it is a fairly large company, however you look at it. Now, the next thing I want to look at is my DCF. So my DCF is going to say that it is 4% undervalued. And even if we check on historical growth, it's gonna say 43% undervalued, and I think this is more accurate. So however you look at it, it is undervalued. And like I said, it's not $3,000 a share. This is in Japanese yen. So it's in dollars, and you're gonna see a dollar price in a second. But just to keep in mind, it does look like it is undervalued by a little bit. Well, decent amount, 43% I think is pretty good. Now, if we check the future growth of the company, the future growth, if you could see here, is currently free cash flow 181 billion. In the next 3 years, it can be a 379 billion. So you have more than a double. And I believe that's where the analysts are looking at that the stock will recover, even there's a bit of a dip, but I do think it will recover eventually. It'll just take some time. The financial health of the company, you do have to be cautious with this. I don't really love that the equity or the debt is fairly high, and you can see it here. Debt level's high, interest coverage is high as well, and the cash is low. But generally, the nature of the business, like semiconductor businesses, it's always going to be like this because they have a lot of R&D expenses. They have a lot of capital expense, a lot of overage. So it's really the business model that it's about. It's not really a software company, so you do have to keep that in mind. Now, lastly, if we check tip ranks is going to say it's a strong buy still. And when I covered it 10, 11 months ago, it was still a strong buy. So, still a strong buy, three buys, one hold. Currently trading at 11 bucks a share, low 14.90, and average 16.48. So, it still looks pretty decent, I would say. And remember, this is an OTC market. That's the OTC as a ticker symbol. So, it's RNECF, just to keep in mind. And I think overall it looks pretty good. More or less so, I would definitely keep this on my watch list. I think for the future, this looks like a pretty decent company altogether, and I look forward to covering Q3 earnings. All right, thank you, everyone. I appreciate it.